Good morning, traders, and happy Friday. It is non-farm payroll day, and we have a special edition of Market in the morning. Or if you're watching it on the Market Terminal, you're watching Market TV. Guys, I hope you've been enjoying these sessions. Have been absolutely amazing this week, going live for you guys Monday through Friday, 8:20 to 10:30 a.m. Eastern. We're going to bring the lab on soon. Market in the morning starts right now, and I hope you guys are ready to make some money. No, what's going on, bro? Happy Friday.
How's it going, man?
Doing good, man. How are you?
I'm good, bro. Just rested, ready to attack that NFP unemployment rate, labor market data that we have right now in about 8 minutes. So I was like, you know what? We'll do a quick prep, and we'll also talk about the winning trades that we both had yesterday on gold, on ES, right, on S&P future. And it's been a great week, and we've been riding the same sentiment the entire week, basically, right? We've been on the same side of the positioning. Kevin and I have often called out the same trades, have similar entries, and it's been a good week because we understand what's going on in the markets and how we can really attack it day in and day out. The best part about us doing this daily is that every week there's something new that's happening, but we're still able to break it down. We're still able to call out amazing intraday opportunities that lead to hundreds of points rallying in the stock markets, thousands of pips sell off on gold. So we're trying to guide you guys through the financial markets because we know it's chaos. A lot of it's chaos. You don't know what data means. And let's go right into that. So we got unemployment rate and non-farm payrolls being the main bread and butter of the week. And here we have arrived. We had labor market data leading up to this, and now we're focused on the following. Unemployment rate forecasted at 4.3, with again a maximum being 4.2 and 4.4%. So these are the institutional ranges that we need to watch out for. In case we exceed either of these ranges, that's when you see excess volatility come into play. And unless you see excess volatility, if we come right on forecast, then it's more of a muted reaction. Good morning to Nigeria as well. On the side of jobs, non-farm payrolls, how many jobs were created this month? NFP is forecasted at 85K. And this is what matters here is the minimum is 50K expectations, maximum is 125,000. What this means is that if NFP comes out, let's say at 55,000, this is below the forecast, but it's still above the minimum. So the market impact is not going to be as great as if NFP actually came out as, let's say, 45,000, because now you're below what the markets were expecting. And that's what this is all about, is that we need to pay attention to what's in expectation and what's not in expectation. And that's how the markets decide how volatile the move will be. Whenever Trump says something that is not expected, you see the markets completely shift or push in a direction with great volatility. And one of great examples is this oil move here. This massive oil move that oil went from $110 a barrel to 91 in an hour is because Trump came out talking about a 2-week ceasefire. And you can see that's not what the market was expecting that moment. So we had much greater volatility versus when you have other minor escalations that are already been going on. They're not as fresh. They're not something the markets are not expecting. Then the moves aren't as great. So then we just continue to chug along. You might get an intraday retrace and then a continuation towards the upside. So that's what we need to keep in mind, even with data, is that what the markets expect and what they don't expect is how you decode how volatile the move is going to be. So let's look at some data and some playbooks for how we can attack gold, how we can attack S&P and US equities during this data release. What we do not want is mixed data, meaning we get, let's say, good unemployment rate, bad jobs data, payrolls data. Then it's a bit more of a mixed condition, and then we'll just scope out market sentiment and how markets are taking in the data and digesting it before we even execute on anything. And that's important here, is that we're not here to use buy stops, sell stops, and be, hey, you got to place a buy stop here, sell stop here, wait for data. No, we're here to break it down, get a feel of how the markets are digesting the data. If it looks worth executing on, we're going to execute on it. And we'll call out these trades. We'll give you our trade ideas, but it all depends on how data plays out. So in this case, unemployment rate we can see if I click the brain icon here on market, it'll open up the playbooks for you. So I already had these two open. Unemployment rate in 3 minutes, same with non-farm payrolls. We can see that for both, the impact on the dollar, the higher the unemployment rate is, the more bearish the dollar is. Because what that means is that the markets are going to start front running or start pricing in the chances of the Fed cutting rates. And what that entails is that it's going to further weaken the US dollar because the markets are pricing in a more easing monetary policy, right? They're pricing in lower rates. And we know the lower rates actively devalues the dollar. And on the other hand, if we come out higher than forecast, above the four, we'll see a more bullish dollar. So, below the forecast minimum, we'll see a more bullish dollar. And then on non-farm payrolls, on the other hand, we can see higher jobs is great for the dollar, lower jobs bad for the dollar. Very simple. And then when you look at gold, you can click this drop down and click any asset, any market or asset that you trade to get the impact and what the potential impact could be via this playbook. So you can see on gold, the higher the jobs are, it's bearish for gold because dollar will be pumping. You'll see dollar inflows. And then same on unemployment rate, higher unemployment rate, you'll see gold push up because again, this means the Fed, there's slack in the labor market. Unemployment rate just went up. You can visibly see the slack. Fed's going to have to cut rates, and that's what the market starts pricing in. I'm not saying that's what's going to happen, is that the Fed's going to cut rate, is that that's what the market prices in. And that's what is also important, is the concept of pricing in. The markets always move on information, either that they are expecting to happen, and then that's when you see when the move actually happens, when the news happens, it's not as eventful because it's been priced in. It's something the markets were forecasting from a while back. So this is our playbook for the day. And now I'm also going to show you what the impact means on ES, okay? And this is where it gets interesting. And this is why I like to explain what monetary policy is and why everything relates to what the markets are expecting for monetary policy. Now we're going to go on ES, which is S&P futures. So you can see, you may be thinking, Malab, why does ES, you get strong jobs data, why does it mean bearish for ES? So we know that ES right now is in a bullish day trading bias and that any slight pullback gets bought back up. And that's exactly what we have been doing the entire week. We've been taking these buys since the war, start of the war. That's been the sentiment. So any minor pullback or intraday pullback gets bought up at a nice area.
NFP in 10 seconds.
10 seconds. Perfect. So we'll continue this. But what this means is higher jobs means the labor market's doing good. So the markets are going to price in higher rates for longer, which weighs on US equities. So we're waiting for the data to come out. NFP 172 above the maximum. Boom. Unemployment rate same. I think the markets are going to focus on this NFP reading here, which if I go, we'll see for gold, that means a bearish gold because we got 172, guys. That is 125K was the maximum, and we're at 172. Now, what this means for dollar, if we go back to the key driver, this is very bullish because we are above the maximum, not only by a small amount. Yes, we're above the forecast, but we smashed the maximum of 125K. And you can see unemployment rate 4.3 right at markets reading. So now I go here. You can see dollar is seeing those inflows, just some spikes, and gold is heading down to our target level that we have been in shorts in since yesterday up here, that we called out live on Market in the Morning. And look at these headlines coming in, guys. Isn't that so cool? So we're going to see gold continuing to push down. You may see some sort of mini retracement. If not, given that the data is so intense and it smashed maximum expectations, we could just see continuation down to these lows, and then we can start to observe how market reacts to this key price point over here. So I'll just hide this for now, but we can then start to see how market reacts to here. Or if we start to see a pullback into here, this is where you would want to look for your scalp shorts that can potentially drive us deeper into here, and you'd have your stops above there, right? I wouldn't want to sell these lows because we just had a dump of about 200 pips on gold, $20 on gold. So you want to take things as they come. And data just came out, guys. It's been less than a minute. So we're still observing market impact. You can see that jobs data did weigh on ES, and we got that initial push down as we were talking about with the playbook. But keep in mind, we have been bullish on ES. So this is just a temporary pullback that is going to get bought up. And that's what we're looking for, is where can it get bought up? Can it get bought up from this lows where we previously saw a little bit of buying happen overnight that led to this retest of 75.75? Let's say we get some sort of push into here, and then we continue towards the upside and we fade out this move because we know that overall day trading bias sentiment is bullish, and this is just a minor pullback. Or we dig deeper into this zone, right? We dig deeper into this zone over here, and then what that gives us is a better opportunity to buy at this better intraday demand zone over here. You can see we've had several taps. Last one we had was Thursday. We went from 7,500 to 76.30s, and that was an amazing intraday rally from this area. So it's the same sort of principle, is that if we come back down into here, and yesterday we had the same push, which we called out, we took the trade, we showed the trade, and then we secured, because you should always secure, like you're heading into an area here where there's a strong wick rejection, where you saw sellers jump in, drive price down to here. So you know this is going to be a good exit point for you, or secure partials and let the rest run. That's what I did. I secured 60% of my position right here. And then I have the other 30% running from down here. But what this gives me now is much more room. And is that this position stop loss is at break even. Even if I get stopped out in this case, what I'm going to look for in this case is for the market to push deeper into this price zone and potentially see how we either react at this low over here, or we push a little bit lower into the demand zone and see how lower time frame structure react. If lower time frame structure starts doing this, you best believe that means we're holding this area, right? We've held this area previously. We're going to continue to hold this area, and then we'll push up. And then we can look for those high risk, high probability buy setups that we love riding on US equities, right? So we're adapting to this data, we're adjusting to it, and you can see we're getting a pullback. That's what I was mentioning. Like this sort of scenario, when you're selling after move, it's not a good thing. And that's why buy stops, sell stops don't necessarily always work. Is that imagine you had a sell stop below these candles here. Guess what? You're gonna get triggered likely down here. You're gonna get filled down here. And then are you really going to hold 100 pips worth of drawdown over here on gold? Or would you rather take something that's a bit more optimal? Now, let's say our price scenario plays out with a little pullback. Let's say you get something like this. You have your stop loss up here, and then at least now you have a nicer take profit down towards the lows, giving you a much better risk reward setup versus trying to execute from lows in the lower time frame. So this is what we're watching out for. Is we'll now drop down into the lower time frame over here after I remove these drawings, and we'll start to observe to see how price action reacts to these lows. So again, if we break below, we're going to likely head down into this key low that we created here yesterday, and where we took those entries for those buys. And those buys played out absolutely beautiful, right, Kevin? Like exactly how we were talking about the entire week, that this level was really, really going to like hold on initial tap.
Yeah, no, it was just this whole week, man. Call out after call out, just trade after trade. We've been killing it, man.
Yeah. So that's been great. Is that, and now we can see we're getting immediate reaction currently. So we'll see how this plays out and how market structure develops, because we are before NYSE open. What could happen is that this area holds. We've seen a hold overnight. If this ends up holding, then we may push up slightly before NYSE. NYSE might do a liquidity move like this, and then maybe we'll just continue back to highs.
Yep.
That's if we hold this. On the other hand, if we don't hold this area, then you're going down here, and then same principles. You drop down into the lower time frame. You start observing how market structure is reacting. Whether is it going to shift? Is it going to push lower? Maybe it pushes lower down to here, pushes up, and then you see a shift in market structure start to happen, which then increases your probabilities of having this nice intraday setup from a key demand zone. And now you can ride it back to all-time highs as that sentiment, which still remains the same. So you can see US futures, rate futures still price in Fed on hold in June policy meeting expected, right? U.S. interest rate futures price higher likelihood of December rate hike after jobs report sees 63% chance versus 48% chance prior. So U.S. interest rate future, again, same thing. Payrolls revised up by 93K jobs for May. Wow.
That's
Yep. Consensus, yeah, man, that was an absolute beat, complete smash of. You can see how all these other calendars just have regular forecasts, 85K. People don't understand that this wasn't just a beat of 85K. It was a beat of 125 maximum expectation, nearly a 50. It was a 47,000 jobs beat from the maximum of 125K. So you can clearly see the impact it's holding on gold. And that, although that pullback didn't come to our area that we were talking about over here, it still came, retested nearly this range that was happening over here. And now, again, we're pushing down into here. So this, although it didn't come back up here, if you were watching price action, this is something you feel comfortable with, by all means do it, because we understand that that's what it means. Like when you have, if I'm looking at gold, I know above the maximum, it's a very bearish gold. And that's exactly what we're getting in this case, where just the move from the release to down here is nearly 300 pips, the $30 sell-off in a matter of minutes. And from up here to down here, again, it's a $20 sell-off. Back to S&P over here. So we are now just at these, and you can see what's happening here is that it looks like we're looking to push towards the upside or just snapping above into these price points, right? Like we went a little bit below. We're still holding above this demand zone that we had drawn out here, right? So we're still holding this minor, and I label this as a minor zone because it's a part of this area where we had, as Imri said, I think value building, and then we had markets pushing up. So I kind of think of it in like orders generating, the market collecting, and then there's a lot of orders. You have an imbalance of buyers in the market over sellers, and then you get that rally and extension. So as we're talking about, is that we could now be seeing that exact thing, is that if price, and I'm going to just hide this one for now, if price starts doing something like this in the lower time frame in 1 minute, if it starts moving like this, now guess what? That means we've just held this same minor resistance that we held at London Open, that we held during Asian hours, and now it looks like we've held post NFP. So what this tells you is, okay, maybe I could look for buys with some tight stop losses here, because I know that if we break here, we're likely digging deeper into here, and I don't want to hold drawdown on that, right? So if I was looking for some short-term buys that I could take towards the upside over here, guess what? This would be a nice area given that price action switches here. Currently, what we see, we don't really see that. We see a rejection of these highs. We see lower highs here, lower lows, lower highs. We saw a massive wick from the data, right? Now you see a low printed after we took out these lows down here. We came right back above. Now, if we start shifting that structure, however it may be, now you get that bullish confirms that, hey, we're aligned in the lower time frame with the more intraday basis. That perfect. Now we can head towards the upside. And if we do that, then breaks above here, guess where it takes us? It takes us to the next range highs in the lower time frame, which is this. And now guess what? Now we're right back at all-time highs, just like how we talked about from the start of the week, is that this is how price action plays out, is that catalysts bring it to specific price points where you see buyers jump in aligned with the overarching macro sentiment, which in this case is still bullish for us on the day trading and swing trading time frame. You can see market has not been bearish on ES since we got the lows printed at 10%. Market was bullish on ES before Trump came out with the two-week ceasefire, because we've got headlines that were hinting towards it, that were hinting towards some sort of ceasefire. And as you know, we pick up all information. We pick up all information as it comes in. You can see all the jobs data that was coming in. And guys, I'm very excited to announce this, that we are going to release this in a matter of days, where all market users will have access to market insights, so which includes live news, which includes the calendars. You can watch unemployment rate come up here. You can watch NFP and also the bias. So if this is gold, I go to ES, you can see I'm bullish here. I can watch the live news come in, high impact. I can see what's actually breaking news. So all the rate expectations, US payrolls, and then I can watch them come in or notifications down here while you trade or while you mark up the chart. So now let's jump right back into that. As I was mentioning, guys, like that, this is a perfect reaction that we were talking about right at these lows. And look, you just saw me call this live. You just saw me break this down live. This isn't just a one-off. We've done this the entire week. We've done this since we started the show. So keep this in mind, is that this isn't, we only do this on NFP. This is a treat. We don't even do this on Fridays. This is because Kevin decided out of the kindness of his heart, he's like, hey, I really want to bless the audience with an amazing stream to guide them through the treacherous markets, especially when there's high volatility data. Like, I know if I search up for a fact on Instagram or Twitter about NFP or unemployment rate, I'm gonna get 13 teeny bopper broccoli kids yelling at they don't understand what just happened in the market, or saying they used a buy stop, sell stop. We're here to actually break this down. You know what I mean, Kevin? Like, that's just the nature of it now, the retail trading community.
Yep. Put a buy stop up here, put a sell stop down here. That's how you trade NFP. No, that's how you blow your account on holiday.
That's how you're going to severely go into psychosis in the markets, where you're going to be chasing a tail.
Seriously.
Right? So yeah, as we're watching this, we can see the buying pressure is kicking in. This would be great for those short-term buys that I was talking about, to take us over this session into this price handle over here. And again, we're going to take it level by level as we are breaking it down, right? Like, this was that area. And then once we break above here, you'll get a quick retest similar to how we did here, which could also call for some short-term buys, right? And we'll call these out as we've been doing them. Gold, on the other hand, man, beautiful. You can see that sentiment is holding through, and it's been holding through because we've been riding these gold bears since the start of the war. People are like, why is gold bearish? What's happening to gold? Guess what? The bias has been bearish, and market has been bearish on gold 85% of the time since the war started. And that's because of what's happening on the front of inflation in terms of the oil shocks or energy shocks that come through, and what this means for rate expectations down the line. Plus, gold was at such a premium price point when the war started. Like, this was the initial impact of the war, where the over the weekend attack happened, and we saw gold push into 5,400s, and that was the top. And that was literally the top of gold. And since that, we have trace, and the war has just further amplified the price of gold to continue down. And in higher time frame wise, you can see we clearly are bearish, and we continue to print lows. We continue to make our way all the way back down, retracing this entire price move as we've previously talked about this several times. So what this means for us is that every single pullback we have faded out. This massive pullback, we faded out. This one on Monday, we faded out, took sells, called those sells out, and those ran for almost 1,000 points. This sell move, again, we faded it out again. Yesterday, we called out those sells right from here. Is that as gold was pushing into this area, we called out these sells with the stop loss above here, talking about, hey, if this stop loss gets hit, we're likely going to push into this area where we previously had our sells the day before, and we'll reattempt those. Because that's where the difference between professional traders and amateurs is, that if I get stopped out here, my bias doesn't change. I'm still aligned with the macro day trading bias being bearish. I'm still aligned with every single one of these purple dots here, which have been events that have happened that have further caused gold to drop, right? As you can see here on hot US import price data. So all of these little things have been events, Iran tensions, right? So when I know this, I know that every single pullback that happens is going to get faded out. Same thing on ES. Every little pullback that happens, like this one from all-time highs, will get faded out, and will start to push in the direction of the macro sentiment. And this is what separates professionals from amateurs, is that if you're an amateur and you see this bullish candle happen, you're likely either interfering with your sell position, or you're completely changing your bias if you get stopped out. What I'm looking for, what Kevin's looking for is, wow, we see a nice resistance in this area where we previously capitalized on some sells. Now, what I can see is if price was to push up into here, guess what I'm going to do, guys? I'm going to look for sells. Guess what has happened when we pushed up into this area? We got sell-offs. Wow, again, sell-off. Whoa, a third time? Guess what's going to happen? It's going to sell off if the market can't break it. If it has no reason to go higher, why do you think the market will continue higher if there's no reason? It's going to fall back into the underlying macro narrative and the day trading bias that currently exists. Same with ES, is that we had those outflows from highs, right? We had these outflows from highs after failing to break them 3 times. And guess what happened? We got buyers jumping right back in from an optimal price point. This is market psychology. Fundamentals and technicals work hand in hand. We had those Iran tensions come at the start of the week, right? Now, if I go to market over here, let's open it up on ES. So we'll go to backtest fundamentals. I just want to open up ES here. And then we'll go to those tensions that we had at the start of the week. I click this candle. Escalating Iran-Israel tensions and Hormuz blockade threats drive risk off into ES. Multiple Iran headlines about halting U.S. communication and blocking Strait of Hormuz, oil spike and metal spike on renewed supply risks, right? So these headlines that came in, Israel-backed forces threatening to block Strait of Hormuz, Iran officials negotiating demand ceasefire in Gaza, Lebanon, call for full Israeli withdrawal from Lebanon. You can see 9:14 a.m. led to this sharp move. And guess what happened? It got bought up, and we bought it right back on live. We called this out, is that we're taking buys here because we know the underlying macro narrative has been so strong on ES that it doesn't give us any reason to continue to fade this, right? Now, when I go back to here and I see dollar continuing to ride off that sentiment, I see gold just continuing to fill this intraday range after creating this high here. I know that if we break this now, I'm more confident that we're going to head back into the lower low that we printed. And now on that higher time frame, or on that intraday time frame, and I'll open up another gold chart just to illustrate this so we don't have to draw on these levels. But what that means on the intraday time frame, and all it looks like is that controlled downside that we get when we see clean trend. You get that controlled downside. You get these lower lows printed. You get a lower high printed. And then price makes its way back down to those lows and creates a new lower low. And then guess what? Eventually, what's going to happen is that this entire move gets completed. And we reach down here because gold remains bearish in the macro time frame, in the day trading time frame, and every single pullback since the start of the war has continued to get faded out. Even this pullback from the lows was relative to this massive outpour on gold that we saw from $5,400 an ounce USD to $4,100. That's massive outflows. So that was relative, but you can see every single pullback gets faded out. Every single pullback on ES has gone bought back up. So what does that tell you? That just tells you that anything that goes against the underlying macro bias, in this case, bearish on gold, bullish on US equities, will get faded out. That market participants are always looking to get the more optimal price for their positioning that's always aligned with the macro bias. Now, if you're not aligned with this macro bias, guess what? You're making your own trading harder. And Kevin, do you remember on, I think it was Tuesday when we were taking these gold shorts, a lot of people were talking about, why are you guys taking shorts and why not the buys? What ends up happening is people see something like this and us giving out an idea, hey, we're looking for shorts here. And they think this is unrealistic because they're like, oh, hey guys, what are you guys talking about? There's a low printed here. There's low, buyers jumped in again. Why do you think gold is going to head down into here? No, but that's not the case. Like, the bias is bearish. So, and look, we're heading completely right back to those lows. So round of applause for our analysis, our execution, and these market in the morning shows, because look, we caught the sells here, right? We caught the sells here. We called out sells here, continuation sells. We called them out. Hey, we'll continue down all the way down to here. And guess what? We also had the other scenario where we said break of the lows, you get the continuation down, and we did. This is macroeconomics. This is geopolitics in play. This is how you actually trade economic data based on how it comes out. But we realized NFP non-farm payrolls was 172,000. That's way over the maximum what the markets were expecting, the maximum of 125K. So guess what? Gold's going to see those outflows. Dollar's going to see those inflows here. And that's exactly how we play the markets. We don't play it guessing it. We understand every piece of data that comes in, every economic data that comes in, how it actually impacts the market. Every piece of breaking news. Is it new? Is it something that's going to hold weight, right? Or is it just something that's been priced in and it's not going to hold that much weight? And that's how we ride these trades. And look, our runners, Kevin, I don't know if you have your runner. I still have my
I'm out, bro. That's
I
all
still
you,
have my
man.
runner. Now that runner is at almost 900 pips from the entry that we did live over here. And same with my ES. I'm still in ES from these lows over here. Yeah, I secured 60% of my position. I still got 30% running. And guess what? That's just going to, I know that even if we come down here and I get taken out break even, I'll just look to re-enter, right? But I'm not in a FOMO state because I have the more advantageous positions in the market. I'm not looking to short here, even though we got the clean play. And I mentioned it would be clean volatility if we exceeded the maximum and minimum ranges. That's exactly what we got. We exceeded the maximum. We got that excess volatility. And that's what this fire icon here says on NFP, right? If I zoom into here, if you see this fire, it says outside expected range, higher volatility likely. And this was the only one that had, so you can see the focus being on NFP and unemployment rate, and unemployment rate came out more in the ranging forecast, but NFP killed it. So now that this comes out, we can see higher volatility. Dollar just continues to chug away, especially with dollar catching a bid since the start of the war. Dollar continues to chug away. ES is still in that intraday zone, minor resistance, and we're still before NYSE open, so we're going to continue monitoring this, but we're still very bullish on ES, and we see gold continue to dump. So just from this pullback, let's say you didn't even enter on the exact lower high, you entered here, you have already capitalized on over 500 points, 500 pips, like 300 pips from this, and then from the higher one, like 400. So now look at that. Now we're below this zone. Guess where we're going to continue next, guys? We're just going to, based off of this sentiment and this volatility, start heading down into these lower levels. We have a level right here, so you can start to target 4,400 for your sell profits. And that's somewhere where I'll look to close and secure some, because that'll be 1,000 pips right here for me. And then guess what? My final target in this case is this low price point over here. I do not expect buyers to jump in anytime before, intraday buyers to jump in or try to jump in anytime before the lows. Oftentimes we'll get initial reactions at lows before we continue in the zone, because it's normal to see markets continue in one direction and then you get sellers taking profit, buyers jumping in, and then what that ends up coming out as is it ends up being a retracement, and then you may see the market create a new lower high before continuing below this low and creating a new lower low in the intraday time frame. This is market psychology mixed with macroeconomics and geopolitics, and how to translate all that into good trades. So you can see market's target level smashed, like absolutely smashed. ES, we're still in this zone areas that we've been watching, that we were mentioning that. Hey, let's bring these back. Then if we start to get this sort of price action start to print on ES, and that's what I was mentioning, was that, hey, you want to be careful and not just buy on that initial bounce, is because that doesn't tell us that there's been a change of structure. As we've been getting these lower lows in the most immediate price action, if we don't start to see a shift, that doesn't change structure, right? That just means that, hey, we may break this area and we may actually head off further deeper into here. And that's okay, because we're still aligned with the overall macro bias, and I'll just look for more buys down there. So gold, guys, Beautiful trade, beautiful setup, amazing continuation from yesterday. If you were here yesterday and you remember this analysis, this call out on gold, the call out on ES, drop us a like or drop us a comment, letting us know, yeah, you caught it or you saw it. Just so you know, it brings us great social proof as well that what we're doing here, people are benefiting off of. Market is a leading platform in the industry in a space where everybody is just making dashboard slops using AI. We have put thousands of hours into macroeconomic research, into the engineering of this platform to give you a product that is so premium, that is so so much of a higher standard than anything else that exists in the trading marketplace. And we're not stopping. So you clearly see that we are bringing out this trading view integration where even if you don't use market as often, you can still use your market account directly on TradingView here with our integration that we have built. We're just in the final stages of testing it, but I love showing this off. Another thing we recently added was Market TV. I'm going to mute my tab. Oh, it's already muted. Perfect. Market TV. And you can see we're live here. We're live here. What I can do if I want to watch Bloomberg, or let's say if Fed is speaking, I can go to that. Or right now, who is live? World Health Organization, amazing organization, right, guys? Like very, very anti-corrupt. Anyways,
every organization.
Yeah, Bloomberg. And then if you go off and you want to watch the feed coming, guess what? You can just increase the size of this. You can leave this here. You can hold it down. You can do whatever you want with it. You can close it, whatever. But the point is, we're constantly evolving. We're always making the platform better for our users, because that's what really drives our satisfaction, is that when you guys benefit off of it, then we're able to improve it, realize, oh, this is what's needed. And this is because this user said it. So many times users have asked us to add something and we've done it because it makes sense. It's you guys understand how to use it best, how you're benefiting off of it, and what's needed for it to improve. So you'll see that not a lot of founders or CEOs of products will publicly say, hey, if you have any feedback, especially bad feedback, send it to us. Send it to me, DM, tweet at me, do whatever you want. Like, just communicate it to me so we can fix it, so we can improve it. Because yes, it is the most legitimate organization in the world. Seriously, we're a team of killers. And I don't say this lightly. We're a team of killers. Kevin here is an incredibly motivated, and his execution skills are on point in terms of trading, in terms of any other work he entails in marketing in the morning, all of these things. Everybody on the team is initiative driven. Everybody does it because they love what we're building.
No.
Right?
Right.
That's so right. What that ends up becoming is a product that constantly improves because the people behind it care so much about it. We're not here to give you a product and not improve it for the next 6 years, as all these other platforms have done, until we came in this space. And now every market research and fundamental analysis platform decides to start improving after being complacent for 4 to 5 years. That's not the type of people I want to give my money to. I want to give my money to two handsome guys on Market in the Morning who built an amazing platform. Those are the ones who deserve my money.
Yes,
but jokes aside, again, beautiful, beautiful trades that are currently playing out and are setting up. Because again, remember, we're still watching this setup, right? We're still watching these. Again, I'll just throw out these ones. So we're still watching how we play out over here, whether we push lower, which is completely fine, or whether we continue to push higher from here. Either one works in our favor, because if we push higher, our position from yesterday, if you guys managed it properly, you should have a runner. And I say you should because it is a practice that we should all have, is you leave a partial of your position going in case S&P goes to 7,800. And guess what? Now you've just eaten so much, right? You've eaten like 300 points of profits on a small position that may end up being bigger than what the 60% that you or 90% that you took profit on was. So that ends up happening. Same with gold. The reason I left the gold runner over here was because I knew that, hey, if we reject this and we were positioned for NFP, what did I say yesterday? I talked about this, that this is positioning for NFP. If we get a stronger jobs data, we're going to get gold completing this. Man, come on. I need everybody to go watch yesterday's show. Leave a comment that you watched it on the video. And next Market in the Morning, we'll give out 2 subscriptions. Leave a comment from those people who watch it, timestamp it, give me your thoughts. And in the next video, Kevin, can you drop the link to yesterday's session?
Bro, let's do it. I got it.
And in the part where we were breaking down the NFP positioning and how it could drive us down to here. So as I was saying, guys, 4,400 was that price area where we got that little retracement that we were talking about, and first sign of sellers exiting and taking profit. Doesn't mean that we're going to continue down. It just means that short term, we had that profit taking from a very round, logical number being 4,400 and a previous price sensitivity area that we have right over here. So yeah, make sure Kevin's going to drop that link right there. He just dropped it. So watch that episode, guys. Watch that episode. Kevin, how many views does it have right now?
Let's see. That one's at, right now it is at 736.
736. Okay. So we'll keep an eye on that. Next Market in the Morning session, which will be Monday. That one we will pick 2 winners for market subscriptions. And we'll figure that out. We'll pick those winners from the comments. Watch it and look at how we break down positioning for NFP and how taking this sell gives us an advantage in case of jobs data. If jobs data comes out stronger, it gives us that advantage to ride out those sells. And guess what happens? If job data comes out higher than if jobs data comes out bad, then gold can push up into here and we can try those sells again because we would still be aligned with the macro day trading bias. We would still be aligned on ES with the macro day trading bias being bullish, even if ES and S&P futures pushes down into here.
No. Any
recent headlines? Kevin, do you want to share some stuff on your end?
Yeah, for sure. For sure. Yeah, no, I'm with you on everything, man. It's funny.
Yeah, I feel like we're always aligned, you know? We're always on the same side. We're taking the same setups, giving different entries, different exits, but we're always on the same side. And that's what it's about, guys. You can see me and Kevin have completely different trading styles.
Yep.
I'm an intraday trader, and I think my charts look like Picasso's. And Kevin is his own trader, and he thinks his charts are like Da Vinci. You know what I mean? We're all doing our own technical analysis, but the underlying macro factor, the objections are all the same. Yep. Now look at this. Guess what we had come up on? Flip watch, guys. I want to show you. This is sick. This is sick. So we had U.S. post another month of strong jobs gains, unemployment rate steady at 4.3%. ES USD sold off sharply right after this headline. Your slightly bullish bias is holding for now. If the move sticks, expect a flip to bearish. Wow. Can you believe it? We had market break it down to us. Hey, there was an event that took place. Yes, the bias is currently holding, but it could cause those temporary outflows that either go into here, right? Into these lows, into this demand zone, or maybe even further to market's pullback area, which is still very valid at 74.80, which is one of the areas that I also have my eyes on right over here, and that Kevin has also been mentioning all week long. And as well as last week, Kevin also brought up that while we were ranging over here, that, hey, it would be great, that it would be a perfect fuck you to everybody buying here, that if we push down into here, then the market rallied. Guess what? That's optimal positioning in that case.
Yeah. Now listen, man, it's all about waiting for the pullbacks, being patient. Markets are known to take money out of the impatient and give it to the patient.
That's right, my friend. And think about it. Like, imagine you saw this massive play towards the upside on ES yesterday, and you didn't take the entry from down here. You're either going to be chasing a trade up here, or when ES is pulling back, you're going to be looking to get into buys. And I'm telling you, I'm sure so many people tried buying ES all of yesterday during Asian session and market open when it was selling off.
Yeah,
which isn't the right move, right? Like you want to make sure that you're not getting caught up and absolutely wrecked by market fundamentals. When you want to make sure you're positioned to the point where it can't shake you out, right? You don't want to be shaken out of things, because that just means you have weak hands and not strong conviction.
That's right. That's absolutely right, guys. Yeah, ES is coming back towards that demand zone right now. That support area we've had.
Yeah. This lower one right here.
I'm looking at 75.40 right now.
Yeah, 75.40. This one right here. Yep.
Swept some pre-market lows. If we hold this area, could just find ourselves ranging back to the highs, but
yes,
we'll see. Slow break down lower, possibly trap some sellers. Retail comes into the market at 9:30, looking at pre-market going, oh my God, we sold off. We're so bearish now, just for markets to shoot up in their face.
So, just for markets to push slightly into here and then again, fuck them all and then push right up into these highs. That's what the market is, dude. So many times, like think about it. When we first started trading, I would get absolutely wrecked. Both sides of the market slapping me across the face, getting red cheeks, can't sleep at night, crying myself to bed. No, you're not crying myself, but you get what I mean. You just get absolutely wrecked when you don't understand what's happening in the markets. And that's the motivation behind what we built. Like we understand that macroeconomics is hard to break down, right? Macroeconomics is hard to translate into trade ideas and how you can have an event take place that could potentially cause intraday pullbacks to a better buying area that aligns with the day trading buys. It's all about things that are happening. And if you're not paying attention to things like this, to like, hey, this is something you should watch out for. This is a flip watch. This could potentially flip short-term bias to drive positioning and price down to 75.20s, right? That's not a big deal. It's that we just know that there's an event that took place that is not aligned with the day trading buys, the outcome of that event. So all we can do is watch to see how how markets digest it, right? Exactly how we were breaking down on the calendar is when I go here, I load up my economic calendar on market, I open up NFP. I go to ES, I see that's bearish for ES. That's short-term bearish. Although the bias we're still bullish on, that's short-term bearish, and then it came up on flip watch like, hey, watch out for this, guys. Like, you're bullish right now, and you can see the price action that followed too was bearish price action. Watch out for this, that this is something that could push it to a lower zone, and in this case, the zones that we have mapped out, right? But if we didn't know that, then I'm just chasing my tail. I'm just looking for buy stop, sell stop, and guess what? You have a sell stop down here below these lows. It gets wicked out and ES pushes up into here. And now you're just taking a stupid loss because you couldn't sit on your hands for more than 10 minutes, right? Yeah. Rather than, or you couldn't wait for the data to come out and see how markets are going to digest it. Like in this case, dollar bulls, gold bears, gold pushes all the way down to 4,400. Perfect exit for short-term sellers to take profit, buyers to jump in, drive gold to maybe a better price point for sells, like 25, 44, 25, and then get that continuation sell off for the remainder of the session and day that evidently will drive us right back down to these lows that we have on our intraday time frame. So that's how you take just data, understand the outcome, not only when there's one piece of data, but when it's a set of labor market data. It's not just one. Yes, these are the key focus, but it's average hourly earnings, unemployment rate, non-farm payrolls, U6. I'm sure majority of you don't even know what U6 underemployment rate is. It's still a form of unemployment rate. Right? It can at times be a more accurate form of an employment rate where the Fed uses this to gauge monetary policy at times. I'm not saying at all times, but at times. So you can see there's so many things that play out. And this is how you take data. You understand, oh shit, this came out on forecast, but NFP blew it out of the water. So this is going to be the one that the market focuses on. And this is higher than outside expected ranges, so higher volatility likely. Somebody said, what is the best time to intervene when everyone's bullish on the dollar? What's the best time to exactly? Yeah. That is the best time to intervene, but it takes more than just dollar pumping from one data report, right? Like you need dollar absolutely chugging it. And look at where dollar is at right now. It's at 99. Yes, increase is possible. Imagine if dollar was surging to hundreds, above hundreds. That's when you in it has to be in a form where it's so intense. And then the Ministry of Finance comes in, boom, intervention. And then you see a short-term impact that does nothing over the course of the intraday period, but it's just short-term with the Ministry of Finance just like coming in and buying a ton of yen, selling off dollars to prop up the yen short-term, which, eventually always gets faded out. So again, this is something that you could be looking out for on gold next. I'll just remove this short play that we have. This play here, or even I like to use fibs at time just to see where we can align. So you can even push off into, let's say 50%, you're heading up, 60% would be that 44.50s area where we sold off from. I'm not saying we're going to go there, but this is an area to watch out for, this 44.25s, because there's these low retests. So you could potentially see a retest of this area and then potential shorts play out. You just want to watch out, and we'll see how lower time frame price action reacts here and develops in the 1 minute time frame before we call something. It may be in a quick fashion, but keep in mind, market has just dropped from this move up here down to here, almost 600 pips. And that's a massive intraday play, plus the continuation from the sell that we were in from yesterday. So that's a few things to keep in mind. ES, again, we're not even at market open. We got 18 minutes on our hand. So
yeah,
Kevin, you got anything to share?
No, you're right. You're spot on. Be patient for market open if you're looking to trade ES. I do like this area for support on ES that we're starting to hold, but we're really better off waiting for New York session to open. Gold's given us a bit of a pullback now. I would love to see gold pull back towards 44.50 on GC futures for possible short, but we'll have to see. We'd definitely be a bit more patient in this market and be a bit more aggressive.
Which level did you say? Sorry.
44.50 on GC futures. It's about 5-10 points above where we are right now.
That aligns perfectly with what we were talking about on actual CFD. Was it? Oh, sorry, didn't mean to do that. It aligns with that area as well. So and it's basically this low, this retest of this low. Kevin was saying that, guys, be patient. We did have the markets express that volatility through NFP. Catalyst being strong jobs data in this case, which caused this move towards the downside. We are below this price sensitivity area over here, which we retested last Friday and pushed up. So similar retest of this area can 100% lead us down to this intraday low over here. It's also to keep in mind that it's not out of the ordinary for a move like this to happen, for the market to retrace up to a higher price point over the course of the session before selling off further. That's not unlikely as well, right? So what I'm trying to say is that still leads to the same sort of positioning we're talking about, where you're aligned with the macro bias, right? You're aligned with the macro trend. And on ES, on the other hand, that if we don't hold this, then we're going deeper into this demand zone, which is fine. And in that case, we just wait for further confirmations that buyers are jumping in, sellers are not in control anymore. NFP is not holding as much weight on ES with FlipWatch disappearing. And plus, we're more aligned again with the day trading bias and at optimal positioning at the lows.
Yeah, I definitely think more aggressive on the gold shorts today than the ES and NQ longs, especially because we got a bit of a mixed bag. Not much.
Yeah, I wouldn't fully cancel that thought though. I do think ES longs are going to play out. It's just a matter of when they play out and from where, whether they happen from here or whether they happen from some higher price point. But I'm still confident in those. I'm still confident in the GC sells and gold sells. It's just a matter of what price point they play out from. Because here's the thing, right? Like as Kevin was saying, is that one may play out better than the other, and that happens at times. Not often will you get both playing out at the same time. Like yesterday's sell-off played out at the same time as the buys on ES played out, right? But you got to also keep in mind, okay, I'm looking to position myself in the market that's going to move better in this session. In this session, we clearly see gold. We see that expression on the one-sided volatility, plus aligned with our macro day trading bias. Now, when that's aligned, it gives us that higher probability that we'll continue to see these one-sided volatility moves, and we won't get massive whipsaws expressed, right? On ES's side, this was bearish for ES, NFP coming out higher because this means strong jobs data. That means there's less slack in the labor market, unemployment rate held off, so that the markets are going to price in higher rates for longer. And that's going to weigh on ES. And that also weighs on gold. But again, that's aligned with the bias. And on ES's side, it's not. Since the bias is still bullish, we know this because every move that happens, every catalyst gets faded out in US equities. Markets are too delusionally optimistic for this to hold more weight than a pullback into a better demand zone, right? It's not something that's going to change structure or anything around that nature. So all this tells us is, hey, this is short-term bearish. We're going to see maybe a pullback into better lows or better demand zone, or we're just going to see buyers accumulate orders here until there's enough orders in the market where we push up at open or push down at open and then see buyers jump in, right?
Yeah.
It's just a game of waiting. And while you're waiting, you're watching all other markets, you're watching headlines come in right on TradingView. So you have these things open, right? Like here, I could have day trading bias for gold open. I have my headlines populating as notifications. So you can turn that on by clicking headline notifications here, right? You could pin this directly here or keep it movable, resize it, doesn't matter. The point is that you'll never be behind the markets. You'll always be in front of them. Now, what this shows me here is that there is this low that was printed, and now it looks like we could be potentially creating like a double bottom if we don't break this area. But if we start heading above now, right? And this is that change of structure. If this happens, I'm not saying it's happening, I'm saying if this happens and we break this, and then you clearly see this sort of structure printing, this is your buying opportunity here, or here if this holds, right? And then you have your stop losses a little bit below that 40s, just in case NYSE comes, it wicks down into this. You don't want to hold the drawdown going into this lower zone because it could go deeper. So you'd want to cut your positioning short there in case this happens, right? That's what you'd want to do. If it doesn't, then you'd want to observe positioning at the more lower levels. Well, so again, things that we're just watching out for and we're calling out. So if this starts double bottoming here, guess what? That's a perfect opportunity for you to be like, okay, I'm okay with taking the risk over here is that I'm okay with being in these buys. And it's fine that maybe we're not ideally at open, that I know that if this starts to bottom, I can enter half my risk here. And then the other half, maybe I'll enter once markets are opened. We see NYSE open and we see buyers cleanly claim this and hold this area. And then you see that lower time frame shift in structure. Yeah. We got some headlines that just came in. Oh, breaking news. CENTCOM states Iranian forces did not attack U.S. Navy vessels, calling such action a ceasefire violation. U.S. forces continue to operate freely amid ongoing blockade. So that just further adds to our optimistic ES buys.
Yep.
Right. So Hassett also said Fed slow to act on rates, sees room for cuts. Nice.
Bro, some of the headlines are like laughable. Like, what are these?
Sometimes you'll see, like, if you know Fed's Goolsby will always come out, say the most brain dead shit. It's like Goolsby will come out after goods job data, be like, oh, we just had goods job data. Thanks, buddy. Why don't you tell us what you guys are gonna do next meeting? Price that in. Like, it's like me if I come to the markets and you see a stock pumping up and you're like, wow, that's bullish. Yeah, no shit, but no shit.
I got it. Let me show you something real quick. There was a headline by Besant yesterday. Besant says Iran conflict halted. Did somebody say timeout? Conflicts don't just halt because you say they're halted. But this is a war. This isn't a conflict. This isn't like, oh, we're coming to an agreement on our tariff deal. This is a war.
It is a war, guys. Like, let's be real. Like, you guys aren't stopping anything. You're saying this, and then on the weekend there's going to be direct escalations that take place.
Yeah.
Like always, every weekend there's an escalation.
Bro,
and we've often talked about this, is that they do this on purpose. It's when you have fresh escalation, things that the market's not expecting that take place during the weekday, it's going to have way more volatility and impact on the financial markets versus if it happened on the weekend, because then Traders have had time to cool off. Markets aren't open. Everybody's adjusting to it. There may be de-escalations in a day or two leading up to market open. So the markets have time to adjust and adapt and keep focus on and price it in essentially. So that's why we see a lot of these attacks that even in 2019 when Trump killed Iran's military general, if you guys remember that, he did it right before market open. He did it right on a Sunday before market open, and then markets, I think he did it like 10 minutes before, and the market had an impact. Yes, there's an impact at open, but it got faded out like not too long after. So here we can see this looks like it's holding. This looks like we're getting that low printed here. Now again, if we break this area on the lower time frame, or we start creating these higher lows here, then that's a sign that, hey guys, we can get into those buys. We can look to position ourselves to ride these buys towards the upside. But again, 8 minutes from open. Let's be patient. Let's check out gold over here. Gold could be setting off for these sells over here, right? It would be okay if we saw even like a play like this, where here, let me show you. If we even saw like a push like this, Kevin.
Yeah, exactly what I'm looking for.
You know, even like that, just because we know, or like you just know markets may just continue from here in that case, like below here, you know. But again, to me, this is much better because it shows me, okay, we took out like whoever is selling here, did this, snap back below, sell here, you know. So, or just like we'll see how this continues, but we've already been positioned on this sell-off, sell play since this candle came out. Essentially, since here, we knew gold was going to sell off. You got this minor pullback, you got this pullback. Then we called out buy a sells here in case we push up here or lower high creation. And that's what's happened so far.
Bro, you caught a nice move on gold this morning, man. Drop. You caught a nice move on gold this morning, man.
Yes, sir. Yes, sir. Well, I didn't take this. I'm still riding my sells from here.
Beautiful, even better.
Yeah, I'm still riding those. I also have a runner from Tuesday as well.
Awesome. Yeah. Guys, Nasdaq just hit new low of day here in the futures market. Market's open in 7 minutes. They're definitely going to be opening more to the downside.
Yeah. Let's see. I honestly think ES might open towards the upside if this holds. If this area holds, and I'll move this drawing over because just a little bit as it develops. But you can see as we were drawing it, like we drew this before, right? It's kind of playing out in that direction, and we're going to monitor this. But Kevin's right that if we open lower, and let's just do some quick drawing. If we open lower than here, right, then we could push down, quick push down.
Yep.
And then maybe into the 10 a.m. hour, we start fading this move, get that buying pick up, and then we see markets pick back up from that known demand area. Just took out these minor intraday lows, similar to areas here where you've seen here. Let's go to this example. This is a very, very clean example.
Yep.
Where you see market previously go off of a intraday known buying area. They retrace, don't make it to all-time highs, come back down, take out those lows, and then buying comes back in here. So you can see similar type of price action where then that leads to new all-time highs over the next course of the few days. So even if we get a break below this area and a break into these lows, let's say we take out these lows, perfect. I'm still aligned on the bias and I'm willing to ride that to the highs and look to position myself again.
Yep. Something I'd also really want to keep an eye on today too is where oil's been trading at. Oil's sort of been a nice gauge of like, hey, bullish on ES or be a bit more careful on ES. At this point, it's been trading in the dead middle of its 80 to 104 range. It's been 92.
Bro, I think we're going to get the weekend escalations and oil is going to open up above 95. I really do think that. I think that this is that change of trend that we have been talking about on oil since this escalation on Monday. Remember, we talked about being able to identify when oil after an escalation and oil reaching 80s is now shifting in structure. I think that even if we come down into these lows, it would hold or it holds from this area. And then you have that change in structure happen, which takes place after oil taps 80s. And now it's more likely escalations are going to take place since the price of oil is at lows. rather than escalations at highs that are more unlikely. So I think that this is where oil starts shifting that structure. And we called it out on Monday as soon as this move happened that, hey, this is from lows, fresh escalations can easily change that intraday structure on oil, where now we're more forced to head towards the upside because we know that escalations are likely with the price of oil being down. When you get to these higher price points on oil, where the price of oil is in the upper bands of lower hundreds, like lower 100s, that's when you see those fresh de-escalations take place that then drives the price of oil down to lows. So it's all a balancing game. None of it is random.
No.
There's a reason why de-escalations always take place when prices are above $100 a barrel, right? Even here, it's not random. And then there's a reason, and it's not random why escalations take place at lower bands of 80s and 90s. Like over here, you can see escalations over here, escalations taking place over here. So none of this is random, right? This is all market psychology. This is human psychology as well.
Yeah.
Do you think Trump is more likely to mention a ceasefire when ES is at all-time highs? Or is he more likely to do it when ES is pulling back? Obviously when it's pulling back, because then he knows that obviously his crew is going to benefit off of it, but it's just markets are just going to rally off of that headline. And that's a manipulated move. That's human psychology. That's just how Trump plays.
Yeah.
So we got that market open, guys. Let's see how we react.
Yes, sir. I was going to say real quick, another way to sort of see that too, and I'm glad you're talking about that with how, Trump could sort of manipulate the markets on the headlines, is when we are in this middle area on oil, this does give them the opportunity to either give us a bullish headline or bearish headline without shifting us out of this range. So
Yeah.
I'm with you on that. I'm definitely expecting some type of increase in volatility and some big headlines come out over the weekend.
Yeah, exactly. So we didn't have anything so far. Markets are still 2 minutes from open. I was talking and I thought this was the open. Like this candle just popped up and I was like, oh, market open. I realized where you yourself a minute to go.
Yeah. No, we still got a minute. ES coming right off of this 75.44.
Yes, that's what I was saying, right? I'm thinking that this actually might end up opening towards the upside, which in this case works out quite well for us, right? Like if this opens towards the upside, then we can continue to ride these buys from here.
Yeah.
And if we ride these buys, guess where we're going to head off, guys? We're going to head off to 75 area. And after that, guess where we go? We go back to 76.10s, where we had yesterday's buyers taking profit.
Yep.
So this is how you just align yourself and navigate the financial markets with data when there's headlines coming out, geopolitical headlines, when there's massive economic data coming out. And then you look for positioning and you map out scenarios that make the most sense, that are most aligned with macro biases, with your day trading bias, that are aligned with events that are happening and how they could temporarily weigh on your positioning and your ideas. That's what it's about. It's about having the full picture and not being blind in a market that rewards clarity. The market doesn't reward blindness. The market doesn't reward ego.
Nope. All right. There's our New York market open.
Yeah. There's that market open.
NASDAQ in demand, ES in demand. If we are going to break lower, it requires momentum. It requires a strong move. Equities on a little bit of a pop higher here, other than NVIDIA, which gapped down from 218 to 213. So that could definitely weigh on markets to the downside. Yeah, look at that drop on ES there.
ES is pushing.
Gold continuing lower. Gold did not give us the pullback area.
Yeah, gold didn't give that pullback. Gold sold off right from where we talked about. Like that just continued. And then ES, I'm liking this right now. Here, let's hide these ones right now, and then we'll get back to these. So I'm liking this move on ES, and again, we're heading off into that lower price point that we were talking about earlier, right? Where ES has bounced from this for days. For weeks, ES bounces off of here. So if we maintain either this zone and we start pushing up now, like we got that slight push to the downside and taking out these lows, if we start pushing up, perfect. That means we respected the zone. But if we don't and we maintain this and we push down in this 30 minutes or in this second half of the 9 a.m. hour, then we can get those buyers in loaded in at that downside, right?
Yep. Beautiful sweep of those lows.
Yes, sir. Beautiful sweep of lows, and now it looks like that scenario that if the 1 minute starts closing here now above this price point, then that increases your probability of that playing out. You know what I mean? Like if you really start closing to the upside now in this area where you take out this 1 minute price action, now your probability of these buys playing out from here works out, right? So let's observe, see how price action starts. Okay, this is just the first 2 minutes of open, so don't get too. Just know that our trade ideas still stand, like these ones that we were talking about.
Oil dropping.
Let me bring those back to life. Yeah, so like either we get a break below here and a continuation to the lower demand zones, or that break of this area and then retest right here would make for clean buys, and then you would have your positioning like this.
There we go. Nice.
And this is what you're targeting. You're targeting this first, 1 to 2, and then this is your 1 to 4.7.
Nice. There we go.
Yeah, from this break, retest, because we talked about this entry, right? We talked about this double bottom entry, but we wanted to make sure that we do it after open. Is that I was saying that, hey, at open, we may just push up, but the optimal setup in that case would be on a lower high here or here after open. Now look at this. Now let's see how we start to play out over here. So now you can see that if we get this retests and closures above this area and you start retesting this, now that probability of ES continuing with ease aligned with our intraday bias over here and our higher time frame bias, plus flip watch not holding as much weight, then plays out. But if this doesn't close above here, then we know this optimal position won't play out until it does.
Yep. Yeah, this is setting up pretty nice, guys, off the open. Very fast reaction. You know, we always look for those quicker reactions too. It shows that those active buyers or sellers are active in that spot when we're getting the reaction, right? I always say when markets are sort of chopping on a level, it's like the markets are dancing on that level, and it shows that there might not be enough buyers to give us that reaction we're looking for. Now we got 50 seconds left in this 5 minute. It's important too, guys, whatever time frame you're doing your analysis on should be the time frame that you're executing on, right? Don't be, if you're looking at a 5 minute, a 15 minute, don't jump down to a 1 minute on the entry and then have a 15 minute stop loss, right? We want to make sure everything lines up together. It's definitely helpful to use the 1 minute, because think of it this way. You're using almost like a magnifying glass on the 5 or 15. But you always do want to come back to that higher time frame, just like Nalab was showing before with the trade entry and the stop loss. At first, it's like, wow, that's a wide stop loss. But then you zoom out and realize, no, it's not. In comparison to my take profit, this is a really valid area.
This is a perfect, 1 to 4 risk reward setup. It's not too zoomed in. It's based off of our intraday setup. It's aligned with my intraday take profit. I'm not taking this off of 1 minute looking to get 3 points. I'm looking in this case to get 56 points with a stop loss of about 12 to 14 points, which is more than fine with me. Is if I'm looking for this to play out right here. Keep in mind, this hasn't played out yet. We haven't called out that entry until this plays out. So that's something that we want to keep and make sure that we're aligned on in that case.
Yep, exactly. Yeah, it's funny, man. It looks good off of this demand zone. I just hate the inconsistency we're seeing, right?
That's where the patience comes in, right?
That's right.
Markets are going to take out the impatient, and if you can withstand what the market is doing when it goes against your trade idea, or if it's not playing out in the way that you want it to while you're waiting for a trade setup, then there's a lot that you can withstand. You know, you're not going to get bullied by the market. You're not going to hesitate when the market doesn't take this buy side. Like that's what I was saying is that, hey, this only makes sense to get in here if we break above this area, which we're clearly having trouble at the moment. But maybe this flips right now. Maybe this flips and we push up, or maybe it doesn't. And if it doesn't flip, guess where we're going? We're going lower over here.
Yeah. Yep. Where you got some targets on gold?
Gold, as I was mentioning, gold is going to push down into
like 44.
So we're below that area now. And now I would look for gold to, let me just cancel out these headline, to dig deeper into 43.75 area.
Nice.
On XCU USD.
Beautiful. Beautiful. Great spot. Great levels. Oil chopping around. The Dow is also selling off. Guys, if you trade the ES, you trade not so much the NASDAQ, but if you trade the ES, it's important to keep an eye on the NASDAQ as well as the Dow. If the Dow is selling off, Dow is our growth, NASDAQ is our tech, and ES is our S&P 500, which is that big basket of the top 500 companies in the New York Stock Exchange.
Yeah.
If growth is extremely weak and NASDAQ is struggling, ES is going to show that.
Yeah. So beautiful trades called out here too from these lows over here.
Yeah.
That was fantastic. ES is still pushing down. So our idea from here didn't play out. So it's good that we waited, right? That's what I mean. It's understanding that waiting is necessary. That, hey, we may just be setting up positioning right now. We don't have to rush this. We don't have to get ahead of ourselves. I'm already in from down here yesterday. I don't care if that goes break even. Guess what I'm going to do? I'm going to look for buys down here.
Yeah.
Right?
There you go.
So now we're getting that push towards the downside. And that's perfect because this could easily now align. I'm going to hide this for now. This is going to align ourselves with our day trading bias and that in that intraday zone. Otherwise, I'm still waiting for this setup over here.
Yep, just gotta be
beautiful extension on gold, guys. Come on, come on. We broke this down yesterday that this sell-off is going to lead to this low. Fucking beautiful.
Wild, bro. Wild, man.
This is how we make money here, guys. Like this isn't random, right? We're doing this shit live. We're calling these trades out live.
Yes, sir. Yes, sir. In the lab, man. You're giving Jeeva a run for his money on the best gold trader over here.
No. Dude, there's one thing that I've seen in the financial markets and day trading all these years is I've yet to meet somebody who has the conviction and understanding of the markets like Jeev does.
That's awesome.
In terms of execution, in terms of knowledge and overall experience. And the only person who I know that doesn't show it off as much as everybody else does. So you know what I mean? Like I learned everything from him. So that's why I'm able to analyze and call these things out, because just like him, I understand it to the core because he taught it to me. Like he taught it firsthand to me. So it's been easy as hell for me to also build this platform and understand and execute to the same level that is required when trading with fundamentals.
Awesome, bro. Awesome, man. Yo, Jeeves gonna come over and beat me up now.
Yeah, he actually messaged. He said you're fired.
Oh,
I don't know what that's about, but it came right as you said that.
At least he didn't overreact. All right, guys. Good stuff, man. Gold continuing on that downtrend.
Yeah, continuing on that bearish bias on gold, right?
Yeah.
Beautiful place, man. This is gorgeous, dude. This is 600 points, 600 pips that played out from this low call out here, as well as from here. That's been about 300 pips right there. ES is still retracing. That's fine. We're being patient. We're waiting to see how we react near these lows, and we're seeing if we can align ourselves with the market participants in this case. Kevin, do you have anything to share on your screen?
Yeah, I mean, sort of coming back to ES and NQ. Let me get that going. Both of them, again, in a support area, but yet just showing that weakness, lack of continuation. Sometimes what I recognize with the NASDAQ and S&P a little bit more than gold is that when we have really clean price action throughout the week, Monday, Tuesday, Wednesday, even Thursday, man. Thursday was a beautiful run up. Friday tends to be that day where the market pumps the brakes. And it's like, okay, wait, we're going absolutely nowhere fast. People who tried to go long over here, they got stopped out. People who were trying to go short down here, they're probably going to get stopped out. It really becomes a matter of, okay, are we at my zone and how's the market reacting? If you're not getting a proper answer to those questions, then you know that your answer to your trade is that you're not to take a trade right now. Gold also just a beautiful drop there, man. I did not take this trade myself. I was looking for a pullback. Like you said, this recent low over here was a great area. We had a low volume imbalance over here too. Was looking real nice, but it did not happen.
Yeah, ES is making its way into that zone.
There we go. Nice drop on ES.
Let's monitor that.
There's that zone lab was talking about. Delete that.
We'll start to observe lower time frame price action into here.
Beautiful. Awesome, bro. Gold on that continuation. What else we got? Oil giving us anything trade-wise? Oil keeps breaking new low of day and then pulling back. Break new low of day, pull back.
Pull back, yeah.
Yep. Dow just on a clean downtrend right now. What else, guys? What else do you guys trade here in the comments? Let us know what you trade.
I'm liking this, man. I'm liking how ES is currently pushing into this area. We're right at these lows again. We've tapped into these lows. So let's start to see how we really react around these price points here.
Yep. If ES breaks, where you got for the next downside target?
I don't think ES is gonna, like, the next target to break would be like these lows, like 7,500. Like, this is that demand zone I'm talking about, right? Like, this is still that pretty big demand zone. So either we take out these lows, reject from here and push up, or I don't see it broken until it breaks 7,506, 7,505.
Yeah, no, I'm with you on that. Great question. Somebody's asking about Bitcoin. Yeah, I'm glad you did, because people were all, oh, Bitcoin's going back to the moon when it cracked above 80, and here we are struggling at 61,000 again. Big drops on that. I've been saying since this has been holding, I wanted to see Bitcoin below 60,000. I believe for a long-term investor standpoint, 60,000 might be the last area. 60 to 50,000 might be the last major dip we see on Bitcoin before it does start to make its way back towards those all-time highs. And if you do buy below that 60K, you're giving yourself at least 100% return on investment if it returns back to
that's insane, man. That's insane.
Yeah.
100% return on investment.
Yeah, no, it looks good. It looks
on
good.
On an investment which has such a mass following behind it, and it's become a staple in the crypto, right? It's the main asset. It's a main market in the cryptocurrency asset class.
Looking back at the past pullbacks on Bitcoin, pulled back 74% here. If it were to have another huge 70% pullback, that would bring us down to the 30 to 40,000 mark. That would be next level fear in Bitcoin. MicroStrategy would probably be like panhandling for money. A lot would happen at that point, right? There's the pain in the market. And when people talk about the AI bubble, the economy's in a bubble, where the inflation's too high, unemployment's sort of starting to pick up, there's got to be pain in the market for markets to crash and have us see almost like an economic reset.
Yes.
Bitcoin, housing, yes, some AI infrastructures. There is going to be pain in a lot of these sectors. So hopefully we can get back to some sort of norm when it comes to inflation and these other aspects. Energy, of course. Dude, energy is going to be the most pain.
Energy?
Yeah. It's let's see where XLE is at right now. XLE is our energy ETF.
Pain.
Yep, just the higher energy goes, the more money these big tech companies have to pay for their energy costs. Not only their energy costs, but shipping costs, delivery costs. So now we're not just talking about software, we're talking about product as well. And if these companies have to spend so much, guess what happens? They pass it on to the consumer. Prices get more expensive. Guess what happens to inflation? Inflation picks up. A lot of people who don't have like a strong fundamental or economic understanding, they think inflation moves higher and then prices move higher, but it's the other way around. Prices move higher, and that reflects to how our inflation is looking. So if we can get ahead of the curve of those inflation reports and see, wow, oil and energy are flying, Guess what? We knew that CPI was going to start coming in above 3% when it was at 2.4% because we had these clues.
Yeah, we had those clues. Yeah.
Yep. So it's all about, use your terminal. Market AI, again, gives us that insight too, is also giving us the day trading bias, slightly bearish, and what could flip it was signaling about higher energy costs.
Yeah, and look at it. We're back into that zone on ES.
Oh, yeah, we chilling on it. We hold. Oh, look at that dropping.
Yeah, we're going into on my screen where I have it drawn out this area, like this higher price band. You can see in this price band over here, in this price zone, is that I'm looking to now go into lower time frame and start seeing where price action starts to give me clues of whether sellers are exiting and buyers are entering. And then if it starts to give me those types of clues, then I'm looking to position myself with the day trading buys, in this case being bullish on ES, right? And then that we would end up fading out this move that was caused by the strong jobs data and just overall markets driving price to a better demand zone over here.
Yep. Yeah, dude, hope it goes to 40K, panic selling, and we buy. That's it, bro. That's it, man. When others are fearful, be greedy. When others are greedy, be fearful.
Be fearful. Yeah. So we're monitoring this right now. There's not any indication that sellers are taking profit right now or buyers are jumping in. So we'll continue to monitor this. We're watching live headlines as they come out because we know that that's what moves markets. As we can see, we had strong jobs data come out, and then we had the flip watch come out. So it says, watch carefully, reconsider your risk. We're looking for buys here, and it told us reconsider your risk. So this is how you prevent a loss from happening. And then we also mentioned to you guys, hey, we're going to look for a break above 75.52 and a retest of it before we even try those buys. Until we get that, it's just going to further sell off based off of this flip watch.
Yep. That's it. And something else to note on a higher time frame scale for us to consider too as day traders is, sure, we could have downside moves on the intraday scale, but remember to zoom out and look at that higher time frame. Right now, we're still only 1.4% away from all-time highs on the ES. This could very easily, like Noad mentioned, have a big headline. Trump says we're coming up with a deal. Even if Trump says something unrelated to the Iran conflict and he says something tariff related or trade related, it could give us that impact and bring us right back there. We are not that far from those highs. It does look like we're starting to sort of lose momentum, as this whole move right here was just a straight up situation, a very rare occurrence in the markets, but it does happen. But it lasted a long time, man. We went from these lows to highs to almost 20% on the S&P 500 in a matter of 2 months. Wild, bro. Sort of like what happened when we had April. Same thing, April lows. Take our measurement tool from those lows to the highs before we started to pull back. 40% right there. 40% gain in 205 days. Okay, well, we've had a 20% gain in 60 days. Do we go a little more stagnant now, like this price action we see here where we chop our way higher, still have pullbacks because that's healthy in a market. So this, again, most likely just a pullback, not a reversal. Markets need a catalyst to reverse an overall price. We have not had that catalyst today, so I'm still considering this as a pullback. As far as it goes, still a pullback. I do think we're going to hit that 75.05. But just a pullback for now until price proves us otherwise.
Yeah. So now look at this. If you look at my screen.
Yes, sir.
You can see markets flip watch came out. It warns us of higher jobs pushing ES down. We get that job data and we see it translated into direct positioning against the day trading bias of bullish, right? So it warned us about reconsidering your risk. And you can see the outflows that we had on ES. On gold, we didn't get a flip watch. Now, why didn't we get one? Because it's aligned with gold's day trading bias, right? It's aligned with it. So we want to continue riding those sells, which we did on gold. And then on ES, what it means is we just wait for better buys. We wait to see where buyers are going to jump back in and where we're going to start to see that price action continue to play out. So besides that, you can see how this clearly pushed the markets towards the downside, right? It wasn't just magic. It wasn't just randomly price starts pushing down. It was purely the fact that, hey, we had a catalyst that came out, and it came out in the direction that's against the day trading bias. So what are we going to do is we're going to wait. We're going to observe. We're going to map out potential areas of attack. If they don't happen, we're going to be on defense. And then we're going to map out another area of attack. And if that happens, perfect. We'll wait to attack then. But until then, we're not looking to jump into positioning without understanding it, without breaking things down, without knowing, hey, there's a demand zone that exists here that we could easily push into because we had higher jobs, and higher jobs is going to weigh on ES. So that's what people fail to understand, is that there's multiple things at play here. It's not just good jobs is good data for US equities. No, good jobs means that you're going to have higher for longer rates since the job market is doing well. That's what it's in relation to. It's in relation to monetary policy. It's not in relation to good jobs is bullish for equities. If that was the case, we'd be back at all-time highs. But guess what? We're right back at these intraday lows. We're testing lower time frame price action, and we're seeing whether buyers are jumping in or not. Now, if we start flipping towards the upside over here, let's say we flip and we start pushing above here, and you start seeing that lower time frame price action develop in a basis of where you get that bottom being formed, and you get sellers exiting, that value creation, that orders generating in the market. It ends up happening in a format like this, and then maybe in the later hours of this session, we start pushing up.
Yep.
Right. Well, guess what just happened there? Now you've just been positioned with the day trading bias. Flipwatch, the warning that Flipwatch gave you, we considered it. We stayed out. We didn't chase those buys up here. We instead patiently waited. We analyzed that, hey, once we break this, that's when you get that clean break and continuation towards the upside. Yes. Otherwise, you don't get that.
Absolutely. Absolutely, man. Great point. Great points. Man, what a gold sell-off, bro. You called it from the top yesterday, 45.30 on GC. Now we're at 44.12.
Yes, sir. And look how beautiful, Kevin, that positioning ends up looking when people look at it. They're like, no way you guys caught this entire move. Yeah, we did. Like, we understand market. We also caught it from here, and we also caught it from here. We've been fading gold for months at a time now.
That's awesome, man. Dude, I can't wait for gold to make its way down to 4,200 on GC.
Yeah, right. See, that's just like where it could go to next.
Bounce out.
It's like we've just been talking about it for so long now.
Yep. Could definitely see gold even continue a little lower from here too. I don't think it's done with this down move.
Oh no, yeah, I don't think so. I think we'll get some short-term relief over here that might cause some sort of initial, when we tap lows initially, we get like a retracement and then we break through them. So we'll see how that plays out. But the next key area where we're going to get a rejection likely is this 43.50. So after 43.75 breaks, like this one, so I'll draw this price point here too. If this breaks over here, then you're going to push down to 48.350s.
Yep, there we go, bro. That would be a huge sell-off, right? And we want to be realistic with the market, right? Is that a realistic move on gold? Yes, absolutely. We've seen huge sell-offs on gold on the intraday scale. It's not like we already had 200 points today on gold. From our daily open, at least, we've only had, we've only had 92 points. So we could be halfway there. This move could just be starting.
Yeah. 100%. This could just be starting. So I'm actually going to test out a buy here, and I'm going to tell you why I'm doing this. I'm doing this with a larger stop loss, and I'm going to test out smaller risk and start looking to build my intraday position from here. The reason why I have my stop loss lower in this case, about down here, 74.95, 94.93 area. And then my take profit is towards the upside over here. But this gives me more room on the intraday time frame. And again, I'm risking profit that I made from my buys here, from my sells up here. I'm risking profit that I made from my buys here, right? So over here, this is just a routine trade for me, that this is at my key area. I'm observing price action. I don't mind getting in a little ahead because this is smaller risk. It's not my full position. And as I mentioned, as we start to, and if we start to build that orders over here and buyers start to jump in, then I'll start to continue to build my position, right? Until then, I don't mind taking a smaller risk position over here because I know my stop loss is aligned. I know my stop loss is aligned that if I take this loss right now, that's fine. Like I've just risked what my profits were, not all of them, but like, a small percentage of them, just so I can take advantage of some setups on a Friday. And you don't want to get too ahead of it, right? Like we just had massive moves that we call that on gold. My runners from here are still going. And look, we're almost at 75 on gold. Beautiful plays, man. The call that we called out from here alone is now 700 pips in profit. ES, on the other hand, is just continuing to see how we react to this price zone. And again, remember the low is over here, right? This is the low. That's why I have my stop loss lower than that. So just something, a food for thought.
Awesome, bro. Guys, what a trade. Great analysis, great breakdowns this week. Absolutely killer episodes. We hope you guys enjoyed these episodes, man. We do look forward to doing these Monday through Friday, even on weeks where we don't have economic data.
Yeah, and then it's like when we don't have economic data, sometimes it's smooth. Like markets are moving smooth, right? We can easily take advantage of clean positioning. And but when we do have economic data, it's just as fun. We just break it down as fun. We catch those great plays. 700 pips on gold from today, all the way from up here, dude. That's now you're sitting at like a massive position, right? Like this move from up here is now sitting at 1300 pips.
Absolutely. Yo, you got it, Jaleel, for sure. Is it free? Is it this every week for $50 a month? So the platform, right? You could sign up with Market AI, and we definitely advise that you do because it is the platform to use. And we also, like we've been showing the past few days, we added Market TV. So this is where you could watch our streams and use the platform at the same time, right? So we click it on. Here we are. It already brings up the stream that we're doing right now. You click dashboard, and you can move the screen around while you go through the platform. So if we're talking about data or news, you could be clicking it and learning it yourself.
Yeah, exactly. It's you could be taking advantage, looking at it, watching the headlines, watching the charts, and just staying tuned in, you know?
Yep, exactly. Guys, make sure if you're not signed up with Market already, sign up, use discount code KEV for 10% off for the monthly and yearly. It's annual fee. It's really the best fundamental platform, and it's the most reasonably priced software out there. All these other platforms, they want $50 for this, $100 for that, and it's just half-assed software that you could probably find online.
Online, exactly, man. It's like you don't have to be paying for every single piece of software out there, right? A lot of them aren't as great, and so you have to really put your money where it's valued and where it deserves to be, right?
That's right.
Kev, unfortunately, I got to hop off, man. Bro, it's been great. I have a meeting in about 1 minute, but gold continues to dump. Beautiful plays this week. Thank you again, Kevin, for hosting this. I'll give you a shout in a bit.
Yeah, for sure. Shoot me a message when you have a sec.
Okay, for sure.
Awesome, brother. Appreciate you for being here this week.
Anytime, man. And I'm good to leave the studio?
No, stay in the studio for now. We'll record that and we'll see if we can get some clean.
Awesome. Thank you so much.
For sure. Take care, Nalab. Everybody, make sure you spam that like button for Nalab. He has been a phenomenal part of the Market AI Market in the Morning show. And of course, he is the CEO and founder of Market AI. So we got to give credit where credit's due. One of the best platforms out there. Again, run that like button up. We're at 7 likes away on YouTube from hitting 50. We do appreciate the support. We had a question asking, any view on USD JPY? I know Nalab was talking about this earlier. VIX hates Friday, that's for sure. Let's see. So USD JPY holds near 160 as Bank of Japan warnings and wages offset Fed support. And what's great with Market 2, guys, we haven't really gotten into the platform itself, some of the details, is it will show you and it will tell you what was moving it last. Yen steadies after Japan warns of decisive FX action. Then we had this big candle over here. Well, let's click that. What happened in this candle? Yo, you could contact me, guys. You could follow my Instagram is @tradingwithkev Always happy, always posting content there, whether it's about economic data, market updates. I posted a video yesterday about SpaceX, how traders should really be a bit more patient before jumping into the SpaceX IPO. Now, SpaceX is looking to IPO at nearly a 1.7 to 2.0 trillion dollar market cap. $2 trillion market cap on its day one of an IPO. That is the largest IPO in history. And let's put this in perspective. Amazon, which has been around for 3 decades, 30 years, has taken 30 years to hit 2.8 trillion. 2.8 trillion. SpaceX is going to IPO at 2 trillion. That is mind-blowing. That is an overvaluation, in my opinion. And I would like to see volatility step in once that comes in. Can we get a big pullback at that point to say, okay, now it's valued at 1.3 trillion. That's a better buying opportunity. When you're an investor, or not so much a day trader, but when you're an investor, you don't want to just look at the stock price. You want to look at the actual follow through, and you want to look at the actual market valuation as well. Is it a solid valuation, or is it something that seems a little bit inflated? Micron just hit $1 trillion in market cap. That is something that is a bit more consistent because of the whole AI trade. I see a bunch. Yeah, so it's just trading with Kev. I'll punch it in the chat right now for you guys. It is on what's it called? Trading with Kev on Instagram. Trading with Kev on Instagram. We did have a Market AI Instagram, but unfortunately it was taken down. There was a big glitch in Instagram over the past couple weeks where it just banned so many accounts. So we're working on getting that back as well. But of course, follow the Market AI Twitter account, which is at @market_AI. We're posting throughout the day on there, man. It's almost like having your market in the morning just on Twitter throughout the whole day. So again, let's circle back. They don't want us winning, bro. You know it. USD JPY, we hit this big candle. What happened? Stronger than expected US May non-farm payrolls boosted USD and pushed USD JPY above 160. US non-farm payroll 172 versus 85K consensus. That is a double beat. Not a double beat, but 2 times the amount of expected, right? We were expected 85,000, came in at 172,000. That is an extreme bullish on that dollar, on that ratio. Rate futures repriced, higher odds of a December Fed hike after the jobs report, and dollar already firm on Gulf geopolitical tensions, yen near prior intervention zone around 160. Myself, I do not trade the USD JPY. I don't trade Forex. I'm a futures trader. So I would definitely keep an eye on just the overall fundamentals with market. Say, okay, do we have any economic events, which we do have some on Sunday? And what also is showing up in my day trading bias? Guys, this day trading bias area should be your go-to every single morning before you even take a trade. You want to make sure that everything is supporting your bias. If I'm looking for, let's go back to ES for now, because again, we know that ES has a more bullish bias, but today we were seeing more bearish price action. Well, guess what? If that's the case, we know that technicals and fundamentals go hand in hand. We're going to be more patient. We might not even take those shorts knowing that there's at any chance going to be that reversal, just like we've been seeing lately. So what's supporting the bias? Improving US-Iran negotiations, lower tail risk of wider regional conflict. Let's see. We even had, like Nalab mentioned, a U.S. posts another month of strong jobs gains is a flip watch. That would have been our red flag to say, hey, no longs today. Our flip watch triggers today with our strong jobs reports. We just found a strong confluence to say we should be looking more so for a short position on the ES thanks to our flip watch tool. Extremely helpful there. PB. PB and jealous. That's really funny, bro. They are. Facts, notifications on Twitter. Yo, there you go, man. Notification on the Twitter market game changer. I don't see the notifications from my girlfriend's text, so I just know market sends something. That is great, bro. Listen, man, the girlfriend text could wait. Market tweets are important. Let's take a look, guys. Let's take a quick dive into NASDAQ and S&P as well. It's 10:05 right now. And as we know, gold is continuing lower. S&P has been struggling. Wow, look at that, guys. I mentioned I think we're going to hit that 75.05. Actually had 75.05.75 marked out. And look at that wick. We hit that perfectly right there, right? So we held this support. We tried to hold as support. We failed it. Came back into it, held as resistance, made our way back lower. And somebody mentioned too, I believe it was Jaleel here in the comments, the VIX. It's extremely important. If you're a day trader, you trade S&P, you trade the NASDAQ, watch the VIX. Look at our VIX all morning today, guys, has been grinding higher. When VIX is making a new high of day, which it made new high of day here and here and here and here and here, that is confirmation that ES will be holding that new low of day. And let me show you exactly how that played out on the charts, right? So we had ES, new low of day, right off the New York session. This 935 candle, new low of day. VIX, what did VIX do? 935, new high of day. Confirmation on this short-term bear trend here on our intraday scale of the S&P 500. What happened on our next candle? ES continued lower. VIX continued higher. Again, if you were not in any short positions here and you were actively looking for a short due to that NFP coming out, guess what? You're taking some shorts with confidence because now you have two strong confluences. You have the VIX confirming trend while VIX makes new high of day. ES is making new low of day. And you also have your confluence of that flip watch and jobs data that came out. So with both of those giving you a high percent of this to work out, those are the types of trades we want to look for, right? We want to be patient and wait for confluence versus just taking any random trade because we feel like it, right? When we started to sell off into this zone, we're not just throwing a buy order in there and hoping for the best. We're waiting for the reaction. We're giving the market an opportunity, and we're, like I said, waiting for the reaction, but looking for the confluence, looking for, it's called confirmation. Confirm to me and yourself that this is a solid trade setup, that this is not just a fake out. Right now, we see VIX is trying to reverse back lower. ES came off of a key level as well. Now, because we know on the higher time frame we are more bullish, that gives me the insight to say, okay, great. If VIX can start moving lower from here, and we could even mark out key levels on the VIX, if VIX can get back below the 1642, I would like to see ES back above 75.25, which would be our short-term time frame internal high right here. That would be a market structure shift on that lower time frame, right? Yo, I got you guys, absolutely. Market structure shift on the lower time frame on ES, market structure shift on VIX back to the downside, give us confidence in the bull trend. Higher time frame is already bullish. We already know this. And bang, what do we have? We're able to look for a solid long setup, stops near the lows we were just at, the target back to those highs that we were trading at in the pre-market. But hey, just like this trade setup, where it required a breakout first and then a retest, we have to wait for the same thing. We cannot just take longs right here because, oh, well, markets look like we're holding right now. Guess what? Markets looked like we were holding over here too for a moment, over here too for a moment, over here too for a moment. And then what happened? It just continued and continued and continued back lower. So that's why it's important that patience is part of your trade setup to know, okay, I do have to be patient for us to take out, like I mentioned, this internal higher, lower high right here. We made lower high, lower low, lower high, lower low. Well, guess what? If we can now make a higher high, I'm going to look to see if we could pull back and make a higher low. Maybe we come back towards this zone right over here. We could use this as our retest entry to go long. And same situation like I mentioned just before. We need VIX to help confirm that. So there's that break. Looks like it is trying to break that right now. It did break that recent high, but we don't take it on the first break either, right? Those are the impatient traders that waited just long enough to see it happen. But guess what? If you just took the single breakout, you would have taken this trade long all the way up here, and just for markets to literally stop you out on that next 1 to 2 minutes. Just boom, drop right there. So we're much better letting it close up here and waiting for the retest to go long. So same situation. This 5-minute candle has 4 minutes left to close. let it close above this zone, give us confidence in that shift, look for a pullback, then we could take those longs. Gold pulling back a little bit here, but continuing low overall. Man, gold has been, like I mentioned, and like Nalab mentioned, bro, Nalab called these shorts on gold when price was trading. When we go live at 8:20, he called it out at like 8:25, 8:30. That was before the news came out, bro. He called it out way up here, even if he called it further down, right? And you caught this whole move right here on gold, 69 points. That is, what are we talking about ticks-wise there? That is 600, almost 700 ticks in that trade on gold that we called out. And again, this is not just a one-off. This doesn't just happen sometimes. This happened every single day of our market in the morning stream this week. Absolutely killer. I'm extremely happy to do these streams with you guys. Of course, make sure you guys hit the like and subscribe button too. We do go live Monday through Friday now here on our YouTube channel, on our Twitter as well. Make sure you like it and hit repost on Twitter. Share it with your friends. This is the type of information that we want to be able to provide to you guys as traders every day. And with market, we have that opportunity. And something else I want to mention, guys, you should not be trading alone. A lot of people get this weird idea that, oh, I could figure it out. Listen, guys, I don't doubt you. I bet you're all extremely smart individuals, but you always need guidance. If you don't have guidance, you're going to spin your wheels. You're going to go nowhere fast. If you have guidance, you have a mentor, you have somebody you can message with and talk with, someone who's in a position that you want to be in, whether it's me, Nalab, Jeev, any other big trader that has been consistent, that's who you want to be able to follow. That's who you want to be able to look up to. You don't want to look up to the next Joe Schmo on Instagram guru that posted like one payout or claims to be a big trader. There's this guy, I won't name drop, but his account literally says formed December 2025. He's been trading for all of 6 months max. And yet he built it up to 20K. He's one of those big yelling Instagram people where it's just like, oh, blah, blah, blah. They're content creators, guys. They're not real traders. They're going to be more on the level of course sellers. And guess what? Their course isn't going to be all that because they barely know what they're doing too. Yeah, bro. Eric, exactly, man. Bloomberg, who? Yo, Eric, man, good to see you. Haven't seen you in a little bit, bro. Yeah, man. Monday through Friday now. Monday through Friday. And we extended the sessions. We went from Tuesday and Thursday, 8:20 to 9, to Tuesday, Wednesday, Thursday, 8:20 to 9, to now Monday through Friday, 8:20 to 10:30, giving you guys the best market insights. How many is it? So yeah, what's going on, Oz? Course-wise, I have a small, I wouldn't even call it a course. I guess so. It's like an 8-session long, just a futures masterclass, something basic. I felt like it was important to still give traders that clarity and just that bridge of, I know next to nothing, to, wow, now I have a foundation. Remember, guys, you're not getting into trading to go, okay, I got to make money right now. If you have that mindset, you got to throw that away. You have to have the mindset of, I need to learn right now, and I need to have that follow through, and I need to understand the foundation. You build foundation, you work off of foundation, you'll see follow through and consistency. You cannot have consistency without foundation. And I do believe that that's one of the main reasons too that market was created, to give traders that foundation of fundamentals, even give traders the foundation of the pullback levels too. Any possibility for gold to hit 43.50? And what are the pullback level targets? I got you, bro. Let's see. So GC pullback. That's crazy. Target level was smashed on GC on market already. But let's see. 43.50. 43. Are you looking at GC futures or are you looking at XAU USD? GC futures, we already broke that low. That's phenomenal. Next area of support. Wow, look at that. Yeah, I think gold's in for a clean sell-off. Next area of support I do see on gold is going to be right over here. So we see that price was selling off, sold off extremely hard. And then from this point, buyers stepped back and took support. So let's mark this out as our demand zone. Again, just a green area that extends across. This would be my next target on gold today, given the momentum and volatility we're seeing. Guys, where is that? That's all the way down here. What did I mention just an hour ago, guys? I said that gold only had a 100-point move so far today. It's bigger moves, it's bigger days. It moves almost 200 to 250 points. That would take us near that 4,300 level we're talking about. When do you think gold would be bullish? That's a tough one, man. I would need to see some strong catalysts turn around. I would want to see us take out major lows first. So my first target on gold to the downside, I would really like to see 41.69 on GC futures get swept and trade below even 4,000. Imagine this, right? Let's put ourselves in the shoes of somebody from 2025 when gold was just flying. It broke 3,000 for the first time. Bang, 3,400. Bang, 3,600. Bang, 34,000, 4,500, 5,600. I always like to circle back to what Nalab was saying at this point. Institutions do not want to buy gold this high. That would be buying in a premium. Institutions want to buy at a discount. When you buy at a discount, your ROI is so much higher. If you buy up here, your return on investment, which is percent-wise, you get maybe a 3% return, a 5% return. You wait for a solid pullback. Let's say you do get in anywhere below 4,000 and price just makes its way back up to that 56, 5,700. You're looking at a 43% return on gold. That is mind-blowing. Yeah, exactly. Same fundamentals and same concepts for XAU USD as well. Let's pull that up right now, XAU USD. So look, it's the same price action, just the levels are a little different. So you can take mind of that, absolutely. Yep. So it's the same for XAU USD. Again, just different price levels, but same exact price action. So I do think XAU USD can continue lower as well. Let's see where we have XAU USD going into price level wise, so you guys are aware. And that's going to be right over here, 42.20. 42.20 is our next target on gold with a stronger and good continuation here. And we really need to hold below this price level right over here, which was 43.66. So we get a nice strong break below 43.66. Could even look for a retrace back to that area to create a lower high, lower low, lower high, target a lower low. So again, just trading with that overall trend. Market gives us that insight, and these live streams will help set you guys up for success as well, guys. Again, we're 3 likes away, man, from 50 likes. Make sure you run this up on YouTube. Great breakdown. I thought I saw another notification. ES breaking out. Yeah, look at that. Good job, Sands. Good call on that. ES breaking out. We broke higher. We're closing higher. We did not get that retest. We did pull back on this candle right here. Take a look at this. Broke it, pulled back, continued higher. I did not take any trades on ES this morning. Pretty range bound. Nothing I'm going to force, especially seeing how strong the selling was off the open due to that NFP. It wasn't due to nothing. It wasn't a random sell in the morning, pump in the afternoon. It was a pullback off of actual economic data, and that's what we want to be aware of. Now, in terms of when do I think gold will be bullish, I mentioned earlier that markets need a catalyst to reverse in price. Whether it is a bullish catalyst, we're forward-looking, we're looking for rate cuts, or let's say it's a bearish catalyst that says, oh my goodness, we're not cutting rates, we're going to hike rates. Imagine gold sold back off to 3,500. Everybody would be panicking, but from a long-term perspective, 3,500 would be amazing. Right? That would net a 60% ROI. Price would just have to return to those all-time highs. There has been no time in history where gold made an all-time high, sold off, and didn't make its way back to those highs again. We can look back real quick and see if we can find any strong pullbacks. See what the biggest percent-wise pullback on gold was. This was just 30%. This over here is just 20%. Let's see. So it seems like the biggest pullback we've had in gold history is the one that we're dealing with right now, right? And that would be this massive, let's see where we're at right now, actually. 22%. Lows of this was 26%. And again, we could see that even lower to 30%. Something I do want to leave you guys off with as well when it comes to doing your analysis on things like gold, S&P 500, higher time frame analysis. you always want to be aware of the percentage. Now, the reason you want to be aware of the percentage is that's where institutions go off of, based off of things like, are we in a pullback? Are we in a trend? Or are we looking for continuation? Or is it a pullback? Is it a correction? So on the S&P 500, from our highs right over here, our recent highs, then we had the Iran conflict. Guess where our 10% level was? Our 10% level was right here. Our 10% level was perfectly right where price reversed. Extreme. Yep. Yo, bro, absolutely, man. Absolutely. Very happy to help with the breakdowns, guys. Whenever you want them. I'm here Monday through Friday now with the Market AI community. Very happy to. It's either me and Jeev, me and No Lab, me and Imre, or whatever other guests we like to have on, right? So if there's anybody else you'd like to see on the show, definitely let us know. We're always happy to bring on guests. Really great fundamentals. And if you guys ever have questions, let's say you want to break down like this on gold, but it's 840, 850. Shoot a comment, guys. We're always answering the comments, always happy to help give you guys and set you guys up for the best success and the highest probabilities too. Let's take a look. ES. Now, let's take a look. We're talking about percentages. Where's our next 10% level on ES? Now that we made new all-time highs, where's our next 10%? Well, our next 10% now lines up 68.70. 68. Yo, bro, absolutely, man. Always fun watching you and Chief Host Market, bro. It's a pleasure. It's a pleasure. It's an honor. It is awesome. So here's our new 10% level on ES, and I'm going to mark that out, right? This is extremely important. Last time we pulled back 10%, we know what happened. We had a ceasefire. Markets reversed 20% to the upside. Can we get another 10% from there? Now, something to mention, though, when you do mark out a 10% pullback, you have to be aware of, are we really pulling back or not? This 10%, we could have marked out, and then price could have made another high, and we would have had to adjust it. Right now, if, what's our high over here? If 76.32 does remain as our all-time high, and price starts to consolidate, and trade lower temporarily, right? We consolidate, we trade over here for a little while. This is a pullback phase. 5% is considered a pullback. 10% is considered a correction. 20% is considered a crash. Let's take a quick look at our 20%. That's our extreme. 20% would probably, wow, even deeper than this low over here. That's crazy. Look at that, guys. 20% brings us all the way down to, wow, 6,100. Well, first off, that would be a great spot to buy some S&P 500 if you ask me. But let's mark that out. This is our 20%. Now, this whole percentage thing that I'm going over with you guys does not apply to individual stocks and companies. And I'm going to give you guys an example here. Meta is a great example of how it does not apply to these companies, because big tech companies can sell off a lot stronger because they're individuals. When we talk about percentages and pullbacks and corrections, we're talking about the general market, S&P and NASDAQ. So right here, Meta sold off 34%. Would have been a great buying opportunity, then rallied up another 62%. Now from these all-time highs to where we are right now, it's down 23%. Again, long-term investor-wise, you're always looking to buy the dip. The next 40% level on what is this, Meta, would be at this 475. Look at how that 475, 40% lines up right with this wick over here. Really nice right there. Yeah, gold to 43.80. Nice. Let's go, guys. Great call outs on gold today. Let's go back to GC on those levels, and let's see those levels. Look at that, dude. We're continuing. I'm telling you, man, I do believe the selling pressure we're seeing, the strong selling volume we're seeing, these candles, none of this is telling us we're going to reverse anytime soon. We're most likely going to get that continuation until otherwise. When we have momentum like this on a 5-minute time frame, we want to be extra careful and look at the 15-minute, look at the 30-minute, look at the hourly. Because guess what? If you're on a 5-minute chart and you start seeing a few green candles and you're like, oh my God, we're starting to reverse. But you really look at it and you go, oh, well, we did just sell off 100 points. Then guess what? If the 5 minutes throwing you off, look at that hourly. Look at that 30-minute. Right? When you look at the hourly time frame at that, this is our 8 o'clock candle, extremely bearish. Does this candle really look like we're going to just randomly reverse at this point? Absolutely not. It had follow through. Next candle, same situation. We could even put replay mode on so it's a bit more clear. This big sell candle does not look like we're going to reverse. The next sell candle did not look like we're going to reverse. We're getting continuation. Let the higher time frame dictate your trades and your analysis, right? Same with the fundamentals. Higher time frame and fundamentals together is what really secures your strong bias and gives you that better execution. I mentioned oil before, not oil, XLE energy. I would love to see energy start to push lower. If energy can start breaking lower with momentum, that'd give me a lot of confidence in the S&P 500 and NASDAQ especially to start pumping again. If we do end up finding ourselves at that standstill where it's like, okay, well now we're in a range on energy, we're going nowhere fast, I'm sitting on my hands. I'm definitely not trading energy anyways, but I want to be extra patient and aware of that situation. Gold continuing lower below 43.80. Amazing, guys. Amazing. Great analysis today. Great breakdowns. Extremely happy with that outcome. Don't forget, guys, you can join us here Monday through Friday now on the Market AI YouTube and Twitter handles. And of course, follow us on social media. Twitter is market_AI. My Twitter is Trade with Kev. My Instagram is Trading with Kev. Give us a follow. We appreciate the support. I absolutely love doing these live streams with you guys. I'm a trader by heart, but I'm also a teacher and somebody who loves helping others in general, right? Even before I got into trading, I always went up and above, always did that extra step, right? Open the door for somebody, give somebody some extra money, take care of the ones that are around you because you want to treat others how you want to be treated. So with that mindset, then coming into trading, I learned so much in my years of trading. I want to give that information to the next person, right? It's all about forward looking in the market. Well, it's always about doing the right thing for everybody else as well. The Instagram, bro, the Instagram's Trading with Kev gang. Trading with Kev. You could also look up my name. It'll come up. Kevin Dubrisky. There you go. First one right here. Trading with Kev. Absolutely. You guys got it. You guys got it. Always happy to help. Always dropping some knowledge for you guys. Always sharing what market is showing. And guys, myself, again, I've been trading 6 years, 7 years almost. Market is one of a kind. I have never seen a platform like Market that breaks down fundamentals, breaks down the economic data, gives an overall bias, gives price targets as well, and is as cheap as $50 a month. That is mind-blowing. They should really be at a higher price, so you guys better lock it in soon. Absolutely. Great to have you guys here. But show some love to Market. I will see you guys all on Monday. I hope everybody here has a fantastic weekend. If you haven't already, make sure you run that like button up. Share it with your friends. Share it to social media. Always show some love and support because that's how we can grow and that's how we can help you guys grow. It's a full circle, man. We're looking to do better so you guys can do better. You guys do better, we do better. Full circle, full growth. Appreciate you all for being here. Have a fantastic rest of your day. Like and subscribe, and I will see you guys all on Monday. Have a great weekend, everybody.